But this is an example of a pre-market breakdown play. These pre-market breakdown plays are usually an intraday play, an early play. You hope to be out by noon. Usually you can hold it through the entirety of the day and it'll come down almost to the starting point on these pre-market breakdowns. That's kind of the beauty. There are larger spreads here, but it's okay. Once the volume comes in, there's enough liquidity to enter and exit positions as long as your size is reasonable relative to the volume. So right now, this is at $10. I would have shorted it at $10.25, just assuming I had a $25,000 pattern day trading account, a small account. Obviously, larger is better, up to a certain amount of liquidity. Then you can't scale in, so there's no point having it. But up to a $100,000 account. But let's just say hypothetically, this is a $25,000 minimum amount you need to pattern day trade. I would have shorted at $10.25, 500 shares. And then I would short again right now, or a couple minutes ago at $10. I mean, you could even short it now right down to you could market short this down to the bid if you wanted to, because it's going to probably tank. Not probably, but it's going to. But yeah, I would have had a $10.25 entry and then a $10 entry for a total of 10.125 at 1,000. And I'd be holding this now, and the indicator was on this pre-market run, once it reached this high point and it had that large candle on the 5-minute, that big red candle was an indicator of a pre-market crack, and that's exactly what I wanted on this runner. It's up on news of they had a small acquisition, holdings company, but yeah, I would be holding this for at least the morning, maybe into the end of the day. And if we look back on the 1-year chart, I mean, if you look at the way this stock moves, it has these big pops and pullbacks. Big pop, pullback. It can't hold gains. It recently had a run to 12, and then it pulled right back to 5, and now it's just doing it again. Near its all-time high. Yeah, so this is what's called a pre-market breakdown, and now it's pulling back to 960. So I would be on a $25,000 account there. Now it's really starting to go. 950 ask, 940 bid. So I would like to see this in the 7s to 8s before I would start closing out, depending on the action. But at 930, this should have a large crash. But it may happen before then. I mean, $8 to 830. I mean, 8 o'clock to 8:30 is usually when that first break happens. So now we're in the 920, so we're up almost $1,000. And it hasn't even really begun to move yet. So this is one of the moves. This is the safest move, the pre-market breakdowns, and this is one of the best plays here that I would be doing. I'll check back as this develops just to show the pullback that's coming. Okay, this is looking pretty good now. We're at 860. Price point would be 10.125. It's about, it's 9 o'clock, so this may bounce a little bit at open or, have some sort of run, but I expect it to pull back at open and then fade throughout the day. But if it doesn't have that morning crash to cover into, then just wait it out, because there's a high probability that it will, based on its historical price action. All these spikes crash. would be at 1,000 shares at 10.13. Let's just, or 10.12. So around $1.50, about 1,500 bucks. I mean, we could just close out and lock it in, but I think this still has more to fall. Okay, it's about 9:20 now, or 9:18, 12 minutes to open, and this was looking good. Tried to curl back up and break through 9, but it couldn't. Like a little, a few shorts covered, I think, here. But now that, that little pullback to 850, and then now our ask is even lower. Highest buyers at 840. This is going to drop even more. Now it's at 840. Broke through that 842 support level, and now we have a new low. So this is showing me that this has further to drop. It's really going to crash it open, and this may come all the way back down into the 7s or 6s. I mean, I'll still probably just lock in profits here into the opening crash, into the 7s. I probably won't get greedy and try to get 6s, but I'm expecting to close this out in the 7s and get a couple dollars per share from our 10-12 price point. And this is a great trade, and this is a great example of the pre-market breakdown strategy, which is the safest and most consistent, certainly. Now we're in 820s. Yeah, this was a beautiful setup. And this happens, sometimes it can happen 4 times a week, or sometimes it's only once. But they're fairly common. Usually you get 1 or 2 a week. Every once in a while you get lucky and get more, but these are pretty safe. I don't think I've ever really seen one not pan out. I mean, I have some supporting data, but it's small. It's just it's only a few at this point. I'm trying to build more. I haven't been recording it until last week, and since then there's been 5 opportunities. This is the 5th within the last 10 days. So yeah, every couple days there's one. 820, so we're almost up $2,000 on pretty much $10,000 investment, and it's not even market open yet. The spread's getting tighter, so that's good. And at open, it'll really tighten up, hopefully. Because right now, if I wanted to insure my cover, I could reach up to the ask, but then I'd lose, 10 cents. Yeah, we'll see. We'll know within a few minutes. Alright, so the market just opened, and we got that extra tank, and I'd be covering into this. 770 would be fine. I'd just, what's that? 30 cents to 80, so $2.30 plus 12 cents, $2.40, so almost $2,500 from our 10, because we shorted 500 at 10.25 and then 500 at 10. So we'd have a 1,000 share average at 10.125. If we covered at 770, then it would have been pretty much $2,500 gain. $2.50 per share on 1,000 shares, right around there. So this is a pre-market short based on that technical breakdown after the pre-market run. That instills weakness in the chart, and it discourages buyers, encourages sellers, encourages short sellers, and then I like to cover into this initial crash at the open before it bottoms out, and then all the shorts start covering at the same time and run it back up. So now it's into the 730s. So, I wouldn't be surprised to see us in the sixes. When it pulls back like this, usually goes all the way back just because everyone loses confidence. There's no strength being portrayed. But yeah, so you just wait for these setups, and they almost always produce. I've never not had one produce. It's about 2:30, and here we are down in the low sixes. And a lot of these pre-market breakers will do this and pretty much come all the way back to the starting point. I mean, all the buyers lose faith, the shorters gain confidence, and it just gets hammered. Once you get this initial crack, that's our short area. Then it's going to fade off into this continued weakness. And then if after this you also get that opening market break, then you can pretty much expect it to come back to near the beginning because no one has any confidence at this point and everyone's just panicking and getting out. The only way it'll bounce back is if all the shorts cover at the same time, and then all the day traders who are watching mistake that as strength, and then they pile in and then squeeze the shorts, and then more people pile in, yada yada. That can happen if all the stars align. But most of the time, this is going to come on a clean break like this. Usually, it'll come all the way back down as everyone loses confidence. So, I mean, we got out a little early, but still, this would have been a $2,500 trade with just 1,000 shares, which is nothing. If you have some real money in capital, a 50 grand, 100 grand account, then you could have made some real money today. But these are beautiful setups, and you can trade these confidently once you get the hang of it. And it's very rare for them to come back with strength and really burn you. Yeah, so this was a good setup and a good example of a pre-market breakdown.